Hey everyone, welcome back to Corporate Decoder, the place where we decode those confusing corporate filings and find out what's really going on under the hood. Today we're diving into Paycom Software's latest report, and let's just say someone's been busy declaring dividends. So what's the big news from Paycom Software? Well, it looks like the company is sharing some good news with its shareholders. They've announced a regular quarterly cash dividend, which is basically a way for the company to share its profits directly with its owners. Think of it like getting a small slice of the company's earnings every few months. This particular dividend is set at 0.375 for every share of Paycom's common stock. Now that might not sound like a lot on its own, but if you own a good chunk of shares, it can add up. The key here is that it's a regular dividend, meaning it's not a one-off bonus. The company intends to pay this out consistently, which usually signals that the management team is confident about the company's ongoing financial health and its ability to generate profits. When will you get this dividend if you're a shareholder? You need to be a stockholder of record by August 25th. This means you have to own the stock on that particular date for the company to send you that dividend payment. And the actual payment date is September 8th. So mark your calendars if you're invested in Paycom. This is a straightforward announcement about returning value to shareholders directly. It's a sign of financial maturity and can be attractive to investors who are looking for income from their investments. Now, while this report mainly focuses on that dividend announcement, it's always good to remember the bigger picture of what a company like Paycom does. They provide human capital management software. Think of all the complex payroll, benefits administration, and HR tasks businesses have to deal with. Paycom aims to simplify all of that with their technology. This means they are in a competitive space, vying with other software giants and specialized HR tech companies. The company's stock is traded on the New York Stock Exchange under the ticker symbol PAYC. This is the primary way most investors buy and sell shares, and its listing on a major exchange like the NYSE signifies a certain level of size and financial transparency. This number 001-36393 is the commission file number. It's like an internal ID for the SEC, helping them track all the filings from this specific company. It's not something most investors will use daily, but is crucial for regulatory tracking. And then there's 80.09574855, the IRS employer identification number. This is the company's tax ID. Again, more for official record keeping than for understanding the company's performance. Their main office is located in Oklahoma City, Oklahoma. It's interesting they are headquartered in the heartland of America, often associated with more traditional industries, but they are very much a modern tech company dealing in software for businesses everywhere. The core of this filing, as indicated by the exhibits, is essentially a press release announcing this dividend. This means the company is formally communicating this important financial decision to the public. The mention of the cover page interactive data file refers to the digital format of this report. Companies are increasingly required to file information in a structured machine-readable format called XBRL or extensible business reporting language. This makes it easier for regulators, analysts, and even investors to access and analyze financial data efficiently. And who is signing off on this report? It's Robert D. Foster, the Chief Financial Officer. As CFO, his signature means he's confirming the accuracy and completeness of the information being presented to the SEC. It's his responsibility to ensure the company's financial communications are transparent and truthful. In terms of a deeper financial analysis based solely on this specific filing, we don't have a lot of the detailed financial tables that usually come in a quarterly report like a 10K. This is a Form 8K, which is typically used for significant events that occur between those regular filings. The declaration of a dividend is definitely one of those significant events. However, we can infer some things. A company declaring a regular dividend is generally a sign of financial stability and predictable cash flow. It suggests that Paycom is not only generating enough revenue to cover its operating expenses and invest in its growth, but also has surplus cash that it's willing to return to shareholders. From a Warren Buffett style perspective, you'd want to know if this dividend is sustainable. Is the company paying it out of earnings, or are they borrowing money to fund these payouts? A regular dividend usually indicates the former. You'd also look at how this dividend compares to their earnings per share. If the dividend is a significant portion of their earnings, it might leave less money for reinvestment back into the business, which could slow down future growth. But if it's a small percentage, it's a comfortable way to reward investors. Without seeing the full financial statements, we can't do a deep dive into ratios like the dividend payout ratio or the company's free cash flow. But the very fact that they're paying a dividend suggests a level of confidence from management in their future earnings power. It's a signal to the market that the company is performing well enough to share its success. It's also important to consider the broader market for HR technology. Companies like Paycom are essential for businesses of all sizes, especially as managing employees becomes more complex with remote work, changing regulations, and the need for efficient HR operations. The demand for these services is generally robust. The key competitors often include giants like ADP, Workday, and Oracle, as well as many smaller, more specialized players. Paycom needs to continuously innovate and provide excellent customer service to maintain its edge. This dividend announcement could be seen as a positive indicator reflecting a company that is not just growing but also is financially sound enough to reward its investors. It implies a steady hand at the helm and a focus on delivering value not just through its services but also through shareholder returns. In conclusion, Paycom Software's announcement of a regular quarterly dividend of $0.375 per share is a straightforward but important piece of news. It signals financial stability and a commitment to returning value to shareholders. While this particular filing is brief, it paints a picture of a company that is confident in its ongoing ability to generate profits and sustain these payouts over time. It's a green flag for investors looking for a combination of business growth and income. What's your take on Paycom's dividend announcement? Do you think it's a sign of strong future performance, or are there other factors to consider? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and be sure to subscribe to Corporate Decoder for more essential insights into the world of business and finance. And don't forget to join our growing community on Discord. The link is in the description. Thanks for watching, and we'll see you in the next Decode.